Hello, and welcome to our comprehensive guide on risk-based internal audit, RBI. Today, we'll delve deep into what RBI is, how it works, its advantages, real-life examples, FAQs, and some key data points to help you understand this approach better. Risk-based internal audit, RBI, is an audit approach that focuses on the analysis and management of risks within an organization. Unlike traditional auditing methods that emphasize compliance and control testing, RBI aims to identify and prioritize significant risks that could impact the organization's objectives. RBI is structured around three key steps: risk assessment, audit planning, and continuous auditing. Let's explore each of these in detail. Step 1. Risk assessment. This involves identifying and evaluating risks based on their likelihood and potential impact. For example, a manufacturing company might assess risks related to supply chain disruptions by considering factors such as supplier reliability, geopolitical issues, and natural disasters. Step 2. Audit planning. Based on the risk assessment, the audit plan is developed to prioritize audits in high-risk areas. For instance, if cyber threats are identified as high risk, the audit plan might prioritize IT security audits over other areas. Step 3. Continuous auditing. This step involves ongoing evaluation and updating of the audit plan as new risks emerge. Using data analytics and real-time monitoring tools can help auditors stay ahead of risks. To visualize how the risk assessment process works, consider a company that uses a risk heat map to categorize risks based on their severity and likelihood. Here's what that might look like. As you can see, higher risk areas are more crowded, indicating where resources should be focused. This ensures that the most critical risks are addressed first. One of the key advantages of RBI is that it helps organizations allocate audit resources more effectively, focusing on areas that have the most significant potential impact. This proactive approach not only aids in risk management, but also enhances organizational resilience. Let's answer some frequently asked questions about risk-based internal audit to clarify common queries. Question: how often should risk assessments be conducted? Answer: risk assessments should be an ongoing process. However, formal assessments are typically conducted annually or biannually, depending on the organization's risk appetite and complexity. Question: what are the tools used in RBI? Answer: common tools include risk heat maps, risk and control matrices, and data analytics software. These tools help in identifying, assessing, and monitoring risks more effectively. Question: how does RBI differ from traditional audit approaches? Answer: traditional audits focus on compliance and control testing, while RBI emphasizes identifying and prioritizing high-risk areas. RBI is more dynamic and aligned with the organization's strategic objectives. Let's take a real-life example to demonstrate the effectiveness of RBI. Consider a financial institution that implemented RBI and identified cybersecurity threats as a high-risk area. The audit team prioritized IT audits, which led to the discovery of several vulnerabilities. Addressing these vulnerabilities not only reduced the risk of cyber attacks, but also ensured compliance with regulatory requirements. Now, let's look at some data to illustrate the benefits of implementing RBI. Here's a comparative chart showing the risk reduction impact in organizations that implemented RBI versus those that followed traditional auditing methods over a 2-year period. As illustrated, organizations using RBI saw a more significant reduction in risks compared to those using traditional methods. In conclusion, risk-based internal audit is a strategic approach that improves risk management and resource allocation, enhancing the overall resilience and performance of organizations. Thank you for watching. If you found this video helpful, please like, share, and subscribe to our channel for more finance and audit insights. Feel free to leave your questions and comments below.